Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 9th of February, 2022. This is episode number 2168. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick note here, if you're on YouTube, be sure that you're on the little thing at the bottom shows HD in red. If it does not, you want to make sure that you click on the little cog, the little settings cog, and select HD. I'm broadcasting in 1080p, so we should be really good. You should be able to see things very, very crisply on your monitor. There is some compression on the YouTube side, which causes some resolution to be lost, but you should be able to see my charts very clearly, and pretty much everything should be crisp. Here we are. What's going on here? Here we are this morning. We're looking at the Convergent Trading pre-market summary sheet here. This is this morning, and we could see that the market's in a risk-on sentiment. Several things came out that leads to this, that have led to this this morning. We have the Ukraine-Russia tensions dissipating somewhat. It's becoming a little more apparent that a move to invade Ukraine is not likely, and therefore sanctions and the turmoil that comes from that, the exodus of people into the rest of Europe, the strain, the lack of production, so on. It's looking less likely. France's Macron has been shuttling between Kiev and Russia and trying to work things out. It really is clear that this is a red line that Putin is putting out there regarding Ukraine joining NATO. So the market seems to be taking a little bit of relieving some pressure, and so prices are popping higher. Some technical stuff we'll talk about a little bit later. The other piece is that there are some whisper numbers coming out on CPI, and it seems like there's an expectation that CPI is likely to be lower than anticipated. So a couple things with CPI, very, very important release tomorrow morning. You're probably going to want to be here for this. It's at 8:30 a.m. tomorrow, US CPI. If it misses by, if it's lower, by any amount, we're likely to see a strong pop. If it's higher, we're likely to see a muted drop. So the risk skew is to the positive side on this number overall from a macro perspective. The market seems to have priced in this potential. The market already knows that the Fed is going to be raising rates. So this is a very important thing to watch out for. We may see more movement than we did with the unemployment figure, even though unemployment was a big miss. And we ended up rallying on that. So that's where we are. In terms of earnings, we had CVS Health, Bunge, CDW, and CME Group, which raised prices last week on all products by 5 cents or better. Hopefully their guidance is better than the market expects. But CME Group is reporting, has reported before the markets. I have not looked at those numbers. After the market, Walt Disney, which is pretty much the last of the majors to be reporting in this earnings season here. And then there are several others, Motorola, MGM, Equifax, Zynga. These are all reporting. One interesting piece, Maersk, which is just a gigantic shipping and logistics company, actually missed on earnings and reported that it's enjoyed these the cost of these containers going way up. Remember, before the pandemic, a container, a 40-foot container, cost about $2,800 from LA to Asia, and those prices went up to $26,000, 10 times This is a huge, huge boost to the bottom line of these logistics companies. And Maersk, one of the bigger ones, is basically saying that that's being relieved. That's impacting the stock, but the market's going to read into that and say, oh, supply chain issues getting a relief, and that's further news that helps boost prices in equities like we're seeing. So it's kind of interesting. It's like a chessboard, and there are pieces that are moving around. In fact, as far as economic events, we don't have anything major. The key major event this morning was balanced trade out of Germany. Was expected at 10.8 billion euros, came in at 7 billion, which is better. Wholesale inventories are expected at 10, expecting 2.1%. And then crude oil, which shows a surplus of 369,000 barrels. And crude has been on the move. Yesterday it dropped like 1.9 or something percent. And gasoline stocks are expected to show a surplus as well from EIA. Those numbers are likely to be a little bit wild if you're trading crude. This particular release, which is every Wednesday at 10:30, unless there's a holiday, this particular release is expected to be a mover as the supply issues are tricky, and there's some movements in that market. So pay attention there. The S&P. I need to get through this. The S&P multi-distribution profile really has been a runner all night. The volume has not been there. 162,000 contracts traded so far. It's been quite muted. The inventory's 100% above settlement. It's 100% long. Settlement yesterday was at 45.13 even, and we never touched that. The overnight low, as you can see there, is 45.17 and a quarter. So really 100% inventory. We expect that to rebalance. A little bit. The range has been okay, 40 points. It's higher than the mode, just above the 1 sigma statistically of the last 252 days. So we still have some pretty decent volatility. The VIX at about 21.5. Pretty decent volatility, 100% inventory. So the market's out of balance here. So we expect some pretty decent movement on the open versus prior days where we were opening right in balance. We did take out some significant figures in the S&P. We'll talk about that in a second. So that's that. A real quick look at yesterday. Scenario 2 played out pretty much as expected. We expected it to take out the 63 low, push a little bit below that. The number I had in mind, as discussed, was 55. It went to 56 and a quarter, missed by 5 ticks, and then it turned around and pushed through the 15. Remember yesterday I was saying if it's going to test anything, it's likely to test that 15, with the 35 being the big gatekeeper here. It pushed through the 15, and then I expected it to pull back. As you can see in the image here, pull back to the 0508. And we got some of that yesterday. So scenario 2 played almost to the dot, yesterday. Here's what we saw in our review segment. We've reformatted the screen here a little bit to show more of the chart. Hopefully you're seeing it a little bit better. Again, make sure that the resolution you're watching in is 1080p for clarity. Otherwise, it's really hard. Let's clean this up. So yesterday, we saw CHOP. We talked about CHOP. We saw CHOP. This is not to say that I want to be right or that I am right or, hey, look at me, listen to me, I am right. This is to say that the process that I'm following is an edge. Learning the auction, learning the narrative, the rotations, volume profiling, having that as a base for whatever else you want to layer on top is an edge. So we know coming in this morning, that's my opinion. We know that coming in this morning, we know that we don't want to be aggressive directionally, that we want that it's likely to whipsaw around, and it did It tested below the prior day's low, so breached the one-time framing up and tested right below, and then came right back into the range on the open, into the opening swing. The opening swing is this blue dashed line. That's the first swing high, first swing low that is formed by the market on open orders. Market on open is a very common way for higher time frames to enter the market, to take their positioning on the day. And so the opening swing is not constrained with time. 30-second opening range, 1 minute opening range, 5 minutes, 15 minutes. It's not like that. It is looking at the swing high and the swing low, the first swing high and swing low, and the market comes right back into it, and then we get our first telltale sign right here. Happened to be lucky yesterday. This is important that I indicate this. Happened to be lucky. It looked to me like it was losing steam. It had poked underneath the prior day's low. Then on the retest, it held the prior day's low, and it came right back into line. And it looked to me like sellers were just unable to hold those lower prices. Delta crossing the zero line here. So we got long, again, I don't remember the price, 71 or 72 was the long narrated in the head trader channel at Convergent Trading as it happened, looking for a push into 80 where there was some size, there was a ledge there, and then it started to run. So this was a really great play coming in early before the impulse and before the trend formed. So that was an early long that was taken, I think around 9:36 Central Time, something like that, right after the IB was built. And it went a lot farther than I expected on the first go. I did expect it to push into 95, 98, pull back, hold for a while, and then make a run for that 15 on the close. But it ended up running for that 15 into 17 early on. And check this out again, the mid, a level that I've been talking about for at least 10 years now, maybe longer. The mid gets a pullback, and it gets another beautiful setup long in play with the trend. And one of the key elements here and an area to scale on the long from 71, 72 was the 85, 86, which I talked about yesterday. That's the low volume node that's separating these two distributions. And you can see the market kind of built a choppy or a chop zone, or a zipper. I like to call those zippers. That's a term I coined many years ago, maybe 6-7 years ago. And what happens here with the mid is that the mid is sitting right on top of this 86, and it's sitting right on top of both VWAPs, both mids for the session. So there's a lot of confluence, but most importantly, on this mid trade long, which I was not here for because my day ends, unfortunately, for the next 2 weeks still. And since my daughter was born in December, my day ends at 1:30, so I can help out at home. So I'm having to cut my day short, which I really hate. But what's most important is that we have clearly defined risks. So leaning against this 86, 87 area with an 82, 81 stop with the IB behind it. Very clear risk reward trade, aiming for the 45.05 again. Really excellent, a 4-hour trade at least, and it ended up playing out with an excess at the top. Very beautiful structure yesterday, and I'm saying this while being sensitive to the fact that people may have shorted this and lost money. I'm not trying to make you feel bad. I'm just talking about market structure in the auction. So let's carry that into what's happened overnight. Let's pull up a clean chart here, and we could see that we've had a nice box consolidation, or a zipper here, that was poked under, and then we came out the other side. We created another box zipper right up here, And so these become the structures that we're going to pay attention to. You can see there's a lot going on here at the 15 line, and it's well below us. And then next comes the 35, the 32 to 35, and we just broke over. So we have broken above the 35, which is a key over underline. We have pushed the 45.50, which is a key test area, and we are holding right near highs. Very bullish sentiment, but there's a lot of overhead still remaining into 74, 85, 86 for today. So those are the key areas to watch out for coming into today. A quick look at the composite to see what we've done. Really important to highlight the support area right down here. You can see we've built a box over the last few days. Since last Thursday, we've built a box. We've broken out of that box, and then we're starting to move into this push to 4,600. So last time we came up to 86. That is expected to be resistance here. We're right into the 100-day simple moving average currently at 55, 45, 55. We're at the 45.50 mid-century figure. And so I'm expecting this thing to pull back just a hair before pushing higher. Pop quiz. If the market pulls back on the open, what is the key area we want to watch this morning? Let's see if you've been paying attention for the last 2 weeks. What is the key area once it's broken through and into the 45.50 now from this box structure from last week? What is the key area to watch now? I'm really happy to hear it. 35, that's right, 45.35. Please remember your price map. Below there, 45.15 becomes the key test area. However, if it gives up to 35, the test of 15 is likely to be slightly weaker. It is a nice structure down there at 15, but it's likely to be weaker. It's telling me that sellers are getting really strong. I'm glad most of you answered the 35, 32, 35 range. Very happy that you're listening. And then beneath there, 15, and then we're back to the 05 MC point of control. And then if we give that up, we start looking at the 80s and then the 44.50, and then we're coming out the other side, and we're going to come out strong, aiming, gunning for that 4,200. So this, remembering these things is really important for your trading. Like understanding and knowing the price map is really important for your trading as you're making decisions throughout the day. So if we look at what's happening here is that we are pulling, again, we're pulling into this strong resistance area right in here, and we're breaking out of a short-term consolidation. We've broken above the other box structure, so we are right in here. We are still diddling in the middle in between the two main volume structures. If you recall, the 46.80s and the 43.43 below, those remain in play. So don't expect directional movement too much. Even with the CPI tomorrow, we may push above the 4,600, but I don't expect it to gun for that 48.08. I think there's still a lot of risk overhang. Some of it is coming off. Supply issues are coming off. Crude oil, which is a sort of inflation risk, is coming off a little bit. And the fact that we know what the Fed is likely to do, so that risk overhang is gone. Remember, the market does not like not knowing what's likely to happen. It prefers to hold cash. There's some relief we're seeing in the treasuries. Treasury futures have rallied a little bit overnight. That's helping provide relief. But again, I expect it to be short-lived. Again, I'm not a macro guy or whatever, but it helps to understand what the story is. We're still in between these two key areas that we have tested and held so far. So let's shift gears and look at what's expected for today. I'm running out of time. All right, so setting up the chart for today's action. Okay, so what are the expectations for today? We are opening way up here. The point of control has shifted to the top. Very, very bullish. I'm expecting us to open, squeeze through, push that 45.60 right here. 45.60, which comes from way back here. It's this high volume node right here. Expecting it to push to 45.60 and then falter. And I'm looking for the inventory to rebalance. I'm looking for a test of 35. Unless the bulls are really, really bullish, I'm expecting a pullback toward the 35. Not to it, toward it. And then for it to consolidate up here for the rest of the session. Remember, we have CPI tomorrow. We're going to end up, we have a gap. We're going to open in a gap zone versus yesterday's auction. Gap rules apply. If the market doesn't fill that gap within the first hour, probabilities favor the gap remaining open until the close. And so I'm expecting this thing to be relatively bullish. So I'm looking for this to gap up, putting a higher low and a higher high, continue to push to 45.60. If it pulls back to the 35 plus 45 points for the day's range, 45 with a 45, 35 with a 45-point statistical expected range for today puts us at 80. And so I'm expecting this thing to push into the 72 and potentially into this 80, 85 area above. These become the highs that we can expect if we are long. So you want to scale ahead of that. The secondary structure is complete failure. The only way I see that happening is on bad news. I'm looking for this thing to be responsive, come back into the 35, bounce around, unable, pull back to the 15. So we're opening at 45.55, come back to the 15. That's 40 points of range. And then it comes back and tags settlement for that statistic at 45.13 and then sits here. It still gives us a higher high, higher low. The gap fill gives us a really good base to launch from tomorrow on the CPI figure. But if we do pull back, then the 35, 15, 15, 13, and on an extended basis, the 05 are in play. I'll leave you with that. Sorry about this being long. There was a lot to cover today. Good luck, and I'll catch you tomorrow morning. Take care.